Hi there, welcome to Kneppy Invest. Time for another Appendix 4C video. This time we're going to be looking at a company called Complii Fintech Solutions. I did do a video on this company for their December quarter results because this company was operational cash flow positive quarter in that particular quarter. And I was interested to see if the company could maintain that moving forward. They have. In fact, they've improved their financial position in terms of their operational cash flow. And the market reacted actually quite negatively to this report, share price down 12%, which could be leading to an opportunity to buy into this growing company. So let's get into it. And before we talk about their results for the March quarter, just a few facts in regards to Complii Fintech Solutions. When I saw Compli's December quarter results, I didn't know anything about this company. So when I saw they were operational cash flow positive, that gave me the impetus to do a little bit of research on this company. And I did find some fascinating things about Complii. They do have two main platforms: a digital platform providing an electronic centralized framework to manage AFSL, which is stockbrokers, financial planners, advisors, centric workflows for compliance, capital raisings, and operational efficiencies. Sounds fairly similar to Ansarada. But the thing that really interests me was the new platform for trading unlisted securities. And this is the platform that has led to the significant increase in cash receipts this company has experienced over the last few quarters. And that new platform for trading unlisted securities is called primary markets. As soon as I started a little bit of research into what exactly primary markets is, I was surprised to see that there were a few companies traded in primary markets that had been previously listed on the ASX, including iSign and most importantly, Animoca Brands. I was a shareholder of this company quite a few years ago, and then they delisted off the ASX in early 2020. In fact, it was March 2020. I have heard some theories about why they delisted, and I'm not sure if it was Animoca's Brands' choice, but I have heard that ASX did not fully understand what Animoca Brands was doing. They're into blockchain technologies and games and all those sort of things. Anyway, they delisted off the ASX in March 2020, listed on the primary markets in July 2020 at 7 cents. And when I did some research on Animoca Brands and primary markets, the share price of Animoca Brands at that point in time was about $1.60. So that's a share price growth of over 1,000%, which put the valuation of Animoca Brands more than $1 billion. And so it mentions here in this trading case study that share price of Animoca Brands was $1.80. I haven't checked recently to see how Animoca Brands is doing on primary markets, but this is one of the reasons this company is generating a lot of cash flow, because of primary markets and because of Animoca Brands and the valuation around this company. Because if you need to trade some shares, and the thing is with primary markets, to buy on this market, you need to be a sophisticated investor. I just did a little bit of research because I wanted to see if I could buy shares, which means you need to show that you generated $250,000 of income in the past 2 years, have $2.5 million of assets, and if you can't show that, you can't buy on primary markets. But if you were an Animoca Brands shareholder on the ASX, you can sell. Now, if I remember correctly, if you sell shares in primary markets, it does cost a fair bit. If you buy, it doesn't cost much at all. So what they're doing with primary markets is they're really incentivizing holders to sell out of these companies. And that's one of the reasons why, or could be why, the valuation of Animoca Brands has gone really high. The other reason probably is because of what they're doing. They're into high growth areas. I haven't looked at their financial state, but that's probably a few reasons why the share price of Animoca Brands has gone up a lot, because they've de-incentivized people from selling out of their shares. So if you limit the supply of stocks or shares being sold and the demand remains fairly high, you will see the share price rise over time. When I first started researching Complii after they released their December quarters, I didn't know anything about the history of this company. And it became a little bit more clearer once I discovered that this was a backdoor listing in December 2020 through another company called InTiger, which I do know a little bit about. It was an unsuccessful company that had been around on the ASX in one form or another since 2001. So as soon as I knew it was a backdoor listing, it became clearer why I hadn't heard much about this company. So it only been on the ASX in this form for 1 year before I started doing research. The managing director is Alan Sarich. She has a 2.6% holding. And when you combine the holdings of the board, management, and founders, it comes to 28%. So definite skin in the game, which means the founders, board, and management, their wishes around the successful future of this company is aligned with the wishes of the shareholders. So there is alignment there. And that is something a lot of investors look for, is skin in the game. Markup of Complii at 9.6 cents after the share price did drop 12% after they did release their quarter results, is only 46 million. And this is for a company that is operational cash flow positive. And the TIG code for Complii is CF1. Before we have a look at Complii's most recent quarterly report for the March quarter in financial year 22, I just want to go back 1 year ago to their first quarter. They released an Appendix 4C as Complii Fintech Solutions after the backdoor listing. And there are a few reasons why I probably saw this quarterly cash flow report and pushed it aside and didn't want to do any more research on this company. So the first one was it was their first quarterly report. So no history in receipts, no history in the growth. Receipts for customers was only $711,000, which is on the low end. And the company was not operational cash flow positive. They were negative by almost $900,000. They did have a little bit of cash, 4.5 million, but because they were burning through cash in operations, it did fall $1 million during the quarter. So let's see how this company has performed over the past year. And there will be significant growth in receipts during the past year. One thing Complii has done is slightly change the formatting of their cash flow statement, and see subtle changes, but no big deal. But receipts up $2.5 million in the past year, from $700,000 roughly to $3.2 million. But the most important thing here is receipts have grown by a significant amount. And sometimes when you do see a company growing their receipts by a significant amount, sometimes cost will grow at an even higher rate. But Complii Fintech have not done that. In fact, staff costs only up $230,000, admin costs only up $160,000, very little advertising and marketing, only $56,000, and very little product manufacturing and operating costs. In fact, that's zero. So because receipts up 2.5 million and costs up about 500,000, it means the company has gone from being operational cash flow negative by $900,000 to being operational cash flow positive by almost $1.1 million. And because they don't spend any money or very little money in financing and investing activities, all that cash flow they generate in operating activities went to the bottom line, and the cash on hand grew from 4.8 million to 5.9 million. Now let's have a look at the receipts history for Complii. We only have 6 quarters of history right here. And the first quarter, the December quarter 2020, was when they were still transitioning from being InTiger to Complii. So we can sort of rule that out. So really only 5 quarters of history right now. I do prefer at least 8 quarters of history to really discern any trend in receipts. But with Complii, even though we only have 5 quarters, there is a definite trend in receipts here. And we did see a massive jump in receipts from the September quarter last year to the December quarter, from 608,000 to 2.6 million. I was a little bit wary of that jump, because sometimes when you see a significant jump like that, you will find the receipts for the next quarter, but they have not fallen. In fact, they have risen again from 2.6 million to 3.2 million. So a definite trend in receipts, even though we only have 5 quarters of history here. But I would still like to see this momentum being maintained over the next few quarters before I become really excited about this company. Now, I do own a small position in Complii right now, just because they were operational cash flow positive the previous quarter. But if I see them maintaining this momentum moving forward, I will increase my position in this company. Now onto the chart for Complii, and this goes back to when they became Complii, or when they backdoor listed on the ASX back in late 2020. In fact, from when they backdoored onto the ASX all the way through to April of 2021, share price actually did fall. In fact, the low in the share price was about 3.6, 3.7 cents in April 2020. But the share price has been increasing since then. There was a little bit of hype in this company around June of last year. Share price rose from about 4 cents to a high of 8 cents. So a nice doubling in share price in a few months. But we have seen the share price be moving up, nice developed uptrend over the past, we'll say 4 to 5 months. Share price has moved from 5.5 cents to a high of 11 cents. So nice doubling in the share price. There is a little bit of volatility, but not a lot. And the main thing I want to see moving forward is an increase in volume. When I see an increase in volume, that is telling me there is certain parts of the market getting excited. And if you do see an increase in volume, a sustained increase in volume, that could be telling us that there could be a fund manager buying or taking a position in the company. Now, we did see the share price reach a high the day before they released their quarterly results of 11 cents. We did see a little bit of selling, not a lot of selling. Once they did release their quarterly results, share price fell from 11 cents to 9.6 cents. But the share price is still in an uptrend. And nothing really negative to say about this chart right now. And so I'd be waiting to see maybe the next few quarters if they can maintain this momentum, their financial momentum moving forward. If the share price is still in a nice developed uptrend, I'll be looking for a slight weakness in the share price. And if I do see a slight weakness in the share price, for instance, we did see that slight weakness in the share price towards late February. Share price fell from about 10.5 cents to 7.2 cents. That would be the time to add to my position. That's all I have for this March quarter Appendix 4C video for Complii Fintech Solutions. If you do have any questions about this company, or maybe any other company on the ASX, particularly those who have already released their March quarter Appendix 4C. Not many so far, about 5 or 6, if I remember correctly. Duxton Waters, Complii, XREF, Adalta, and Sensera. Sensera is a shell of a company. They sold out of their business and are looking for opportunities right now. So I won't talk about that company right now because there's nothing really to talk about. So if you have any questions about those companies, I'd love to hear your thoughts, your comments, your questions, so leave it in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. It is 4 minutes to 10. Market's about to open, so I'm going to end this video right now and see how the market opens up for today. Will it be up? Will it be down? Who knows right now? I think it'll be up slightly. That's just my opinion. So see ya. Have a good day. Have a good weekend. Talk to you later. Bye.